Hello everyone, this is Matthew with MK's Trader, and today we are looking at the Dow theory, the very basics of this idea that was created by Charles Dow. You can see I got a nice picture of him right in the center. He was a great investor, I believe, about 100 years ago. So these concepts are concepts that are really old. And if you want to learn more about who Charles Dow is, I'm sure you can research him, but that is not what we're going to be talking about today. We're going to be talking about his ideas, the Dow theory, which is equivalent to trading about as much as Newton's laws are equivalent to physics. And so let's take a look here. We're going to just look at some of the basics. There's about 6 real principles to the Dow theory. We'll look at 4, and they don't correlate completely with the 6. These are just like basic ideas that are part of the Dow theory. But the Dow theory also includes stuff about volume and moving averages and some stuff that we are not going to talk about in this video because we haven't really covered it in any of the videos prior. But know that there is more to it than these simple 4 concepts. But let's jump into it. So let's see. So securities generally move in trends. So if you don't know what security is, security just includes stocks and anything else like it, ETFs, bonds, everything. It's just like basically anything you can buy and sell and trade. And so we were saying that securities, or all these things, generally move in trends. There's usually, as you can see in this weird picture I drew, which is really kind of funky. I'm not sure why I drew it this way. It just drew a bunch of trends. And basically in any security you can look at, there's going to be trends up and down and sideways in all directions. There's always going to be some type of trend. It's extremely rare that you're going to see something that has absolutely no trend. That's just completely volatile and out of whack. But it is possible. So that's the first basic idea. The second is that trends appear in patterns that you can just see repeatedly and with support and resistance trend lines. So you can see in this screenshot I took of the BioChrist security that this sideways trend has a trend line. It's a descending triangle, and you can see that as it goes along, it follows this support and resistance. So the support line is the line on top, and I'll go into that definitely more in detail in later technical analysis videos. This is only the 3rd lesson, but you can see that it reaches up and it goes near it, and then it comes back down and comes back down. It doesn't quite break it. And this resistance is the bottom line, that it goes near, but it doesn't break down below. And with almost any pattern, you can draw these lines and see and use them to make money and trade with the trend. When it goes to the bottom, touching a resistance line, buy it and sell it when it goes up to the support line. You can see my 2 flags I drew. That's where I bought and sold this stock and made a decent amount of money. So you can see these patterns repeat repeatedly, and that's part of the concept of the Dow theory. I drew a really weird picture for this, but it was supposed to be a guy thinking of his chart and thinking about how he can make money off it. Whatever, I don't know. But primary trends always include secondary trends that move in the opposite direction, known as retracements. So I don't know if you can really see this screenshot on the side, but this is a snapshot of Tesla. And you can see that there's a main line I drew that's heading upwards. And that's the primary trend. The primary trend is upwards. It's an uptrend. But you can see I drew tiny little lines that go sideways. They're the opposite direction, perpendicular to it. And those lines are the secondary trends, or the little bumps backwards. So there's primary trends, secondary trends, and there's also minor trends. And minor patterns, I should say. And the minor ones are all the little candlesticks that are moving up and down. And I've heard this analogy once, but the primary trend is like the tide of the ocean. There's the tide, and then the secondary trend is like the waves. So the tide comes in, the waves are moving back and forth, and then the minor trends are just the little ripples on the top. And in that kind of way, that's how all trends work. And trends remain in place until a major event stops them. So my example here is the coronavirus. A lot of major trends actually stopped and started going in a downward trend. Well, not a lot, but some. And then the Inovio, which is a Novio stock, which I will show you shortly, actually went from a sideways trend, I believe, or a downwards trend to an upwards trend because of the coronavirus, because they were finding a vaccine for it. And this is when it's really important to know some fundamental analysis, as I talked about in a previous video. I may put the video in the link below. But sorry, I just lost my train of thought. In fundamental analysis, if you really know your fundamental stuff, you can predict when a trend is going to stop and go the other direction, because you know what's going to happen. If you knew the coronavirus was going to break out, this is an example which is unlikely, or you knew about it beginning before it got really big and started affecting the stock market, you could have gotten out of some positions so you could save some money, or gone into some positions if you knew before everyone else knew somehow that, or you researched it and realized before it got into a mania that the Inovio stock was a stock looking for a vaccine for the coronavirus. You can make some money off that. So let's look at some examples of these different things. Okay. So basically, in any stock you look at, you can see most of these things. You can see the patterns, you can see that they move in trends, and you can see that they always have something that kind of stops them. So let's look at the Inovio stock first. So you can see that before something happened, it was kind of moving sideways right here. You see this? Kind of moving sideways, wasn't really going anywhere, and all of a sudden, it kind of just went boom. And we started going, and we really grew. There was some pullback, but it went huge right here. And right here was when they started finding a vaccine, right around here. And then became a big thing. Everyone knew about it, and everyone was buying in, and it became huge. So that is an example of a stock moving in a different direction because of fundamental analysis, or something that was happening that you wouldn't be able to know if you were just using technical analysis, but is a key part of Dow theory, that all trends, this sideways trend, would stop only if something was going to happen, like, for example, the coronavirus, making it big. So, another example of just looking at trends, you can look at Tesla. So you can see right from the bat, strong uptrend. That's a trend. You can see that there's little pullbacks where the trend moves downwards. And, mess with my trend line, but you can see it goes down and down. You can zoom in. So this long line I drew up top, that's the primary pattern. Then there's these secondary ones that go down the side. If you zoom in a lot, you can see the little minor trends that are just last days. Really short days, or just a couple weeks. And all these things make up a trend. So, that's about the extent of the video. You could basically look at any stock and you can find an example. You see this is in a solid downtrend. You can see that you could draw support and resistance lines. You can draw them. This one's a little bit difficult because it's in quite the downtrend, but you could definitely still find them. Right here is trading a little bit sideways. You could draw a trend line right here and see that it's got that support right there, a resistance I should say, and up top you got this support, if I can draw the line. So you could basically do this with any stock. You can find support and resistance lines, find the patterns, realize that they're moving in primary trends, secondary trends, and minor trends. See that almost any stock moves in some type of trend most of the time, and also see that it only really stops the big primary trends when something happens. So that's really the extent of Dow theory for a beginner. There is definitely more to it, but it doesn't go really beyond this too much, especially for a beginner. That's all you really need to know, and that can help you when you're making trades, and you can help you realize how the stock market works, because that's essentially how it is. It's like in physics with Newton's law. If something is in motion, it stays in motion. The same concept with a trend. When something is in an upward trend, it's going to stay in the upward trend. It was going to have those pullbacks, right? But it'll stay in the upward trend. So Anyway, I hope you like this video. If you like it, please like and subscribe, and leave a comment below if you want to learn anything else or you need clarification for any of this. I hope you guys have a great trading day, and I'll see you later.